An economic hurricane is coming. How should we prepare? So an economic hurricane is coming, Jamie Dimon says, and why I think we could see a 400% gain in gold and silver miners. So let's just cut to a clip with Jamie Dimon.
It's a hurricane. Right now it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
Michael Burry just predicted the unthinkable. He says that 2022 is going to be like watching a plane crash. Those are his words, not mine. And he's saying that 2022 could play out just like 2008. In other words, the GFC 2.0. I'm going to explain the similarities that I see between today and 2008 in 3 simple, fast steps. Step number 1, let's go over the Fed's reverse repos and, more importantly, counterparty risk.
So this is the video of that short little clip that I just played on George Gemmon's channel. Michael Burry just predicted the unthinkable. It's just like 2008. And I'll put a link in the description below. And in the video, George shares what Michael Burry was talking about and what Jamie Dimon was just talking about with this inflation, quantitative tightening, and also the repo market. So definitely encourage you guys to watch that video. So let's hear from Jamie Dimon again.
I want to make a few comments on current political and economic environment. These are not contradictory. They're different than in the past. We have a strong U.S. economy fueled by monetary and fiscal stimulation that you've never seen before. So it's different than a strong economy. And the consumer is in very good shape even today, which means if we go into recession, it may be different than prior recessions. But that strong economy is being met by 2 countervailing forces, both of which you've never seen before. Okay, high inflation, QT. And obviously, the Fed's going to try to meet it. We don't know the outcome. That's your guess. But we can have a good scenario all the way to a bad scenario. And the war in Ukraine, the humanitarian crisis, the impact of the global economy, rolling in the global oil markets, wheat markets, commodity markets, et cetera. Wars have unpredictable outcomes. We're prepared for that. We have to be, because our job is to serve our clients through thick and thin, through good times and bad times. Strong economy, big storm clouds. I'm calling them storm clouds because they're storm clouds. They may dissipate. If it was a hurricane, I would tell you that, or a tsunami, like we had in 07 or 08. They may not dissipate, so we're not wishful thinkers. Obviously, we want it to turn out well, but we can handle all of that.
And also coming in from Zero Hedge, it's unprecedented. Goldman president echoes Dimon's hurricane warning. A day after JP Morgan CEO Jamie Dimon accelerated his anxiety level for the future from storm clouds on the horizon to an imminent hurricane, Goldman Sachs president John Waldron piled on with the pessimistic opinions. At an investor conference this morning, Waldron joked that he'll avoid using the weather analogies, but spelled out his fear that risk from inflation, changing monetary policy, and that thing happening over there could kneecap the global economy. This is among, if not the most complex, dynamic environments I've ever seen in my career, Waldron said. The confluence of the number of shocks to the system to me is unprecedented. Waldron emerged as one of the harshest critics of the Fed. We expect there's going to be tougher economic times ahead, Waldron said. No question we are seeing a tougher capital markets environment. Finally, Waldron warned of a slowing in the merger market from the current resilient levels. That's going to start to roll over because you see demand destruction. CEOs get a little less confident, Waldron said. That's a reasonable expectation, but we're watching that carefully as a signal. So how to play this market if we do have this economic hurricane coming? Well, let's just cut to another clip with John Najarian.
John Najarian, what are you doing? What are you trading? How are you trading this market right now?
I've got an awful lot of cash, Scott, as you know. We've talked about it, so I won't belabor that. I am trading an awful lot of option positions. CRM was one I talked about with our Dominic Chu yesterday. Worked out very nicely, mainly because, Scott, I think just like Jim Cramer has said, there are some stocks that have just been hammered to the point where you can make a bold call like Jim likes to do and like he's done successfully. So whether it's Meta or whether it's Google, in my case it was CRM, I thought after coming down from 330 to 165, that represented a great opportunity. So I put on an options spread in there. I put on a stock. Both worked out very well. I've now rolled up to the 185-200 call spread out in July, taken off all my stock. But that's the way I'm doing it, Scott. I'm really finding some opportunities, primarily in beaten up stocks. Every once in a while, something on the put side shows up, and I'll trade that as well. But I'm really trading.
So for those of you who don't know, John and his investment and trading style, he does trade a lot of options. Similar to myself, predominantly on the sell side, so we sell options for premium, but also buy options and spreads. And as you saw there in that clip, he's buying call spreads on Salesforce. I would suggest that they'd probably be longer dated options. Generally, what we do is we sell short dated options. So when we're selling options, we sell short dated options, and when we buy options, we're buying longer dated options, wanting to buy time to be right. Now, what I'm doing at the moment is, like John, a lot of cash. I know cash is trash, but cash might just be king in 6 or 12 months' time. I'm also selling options. So I'm selling a lot of naked puts, especially on gold stocks and silver stocks and some other commodities, to position myself in those stocks. And that's been a great trade really over the last 6 to 12 months for me. Strangles as well. Those of you who know the other bond king, Bill Gross, one thing he was very famous for was selling strangles. So you'd sell slightly out of the money puts, and then at the same time sell slightly out of the money call options. So you'd basically, as long as the stock traded within that range, you're just picking up huge premiums. But for me, I'm doing that on stocks I want to own, so I don't mind if the stock falls and I get exercised because I wanted to buy it anyway. So a lot of you that follow this channel will know I talk quite often about the 1973-74 style recession, that I think we're going to see something very similar now, and that's where the S&P 500 falls 50% nominal terms, while CPI remains elevated. Back then it was at 12.5%, as the Fed was raising rates to fight that or combat that inflation, that CPI. And a lot of you in the comments have said, yeah, Steve, but if the S&P falls, if the stock markets fall, then gold stocks are going to be hammered as well. And I knew I had a chart somewhere, and I found it. It's from Crescat Capital, so Tavi Costa. And here's that chart that shows the Barron's Gold Mining Index versus the S&P 500 during that 73-74 style, well, during 1973-74. So, yeah, as the S&P 500 went down, the gold mining index went up. And I'll let you guys have a look at that percentage term in how much the Barron's Gold Mining Index went up. Now, I've also shared this chart before. So during that 1929 crash where the Dow fell 2/3, we had Homestake Mining that gained 600%. So I guess what I'm trying to say is, yes, I'm bearish the overall stock market, ETFs, indexes, and whatnot. However, this is where the value investors, where stock pickers really earn their keep. Anyone can just buy an index and just ride the wave up. But it's when the market is falling, being able to pick individual stocks. And I've shared many times, Chalice, my investment in Chalice Mining. So, you know, as other gold and silver stocks fell, and when the market fell, well, my Chalice Mining went up 25x. So here's a great chart of spot gold versus the junior miners. And, well, you can see that the gold price has done quite well. In the last couple of years, last few years, the gold price has done quite well, yet the miners have lagged. So what are we seeing here? Well, in my opinion, what we're seeing is people running to gold, both the physical, but also a lot of capital inflows have come into the ETF market. And we'll have a look at another chart in a second. However, that capital hasn't flown into the mining stocks. And why would it when you've got what we've had in the last couple of years with interest rates reduced to zero, massive amounts of quantitative easing, free cash basically to go and pump into growth stocks. And growth stocks have smashed it out of the park until recently. And so there's a great hedge. Buy physical gold at the same time investing in growth stocks. However, we see a rotation out of growth and into value, and in particular into gold and gold and silver miners. And so once again, you have a look here. We're expecting about a four times increase in the junior gold miners. Not financial advice, mind you. And I've shared this chart before. So you can see that there has been a lot of fund flows into paper gold, okay, but not gold miners. So we do see this changing. Once again, I talk about Wayne Gretzky, skate to where the puck's going to be, not to where it was. Position yourself ahead of time. That's how we do these things. And sometimes you got to wait just that little bit longer than we all expected, but value works in the long run. So yeah, we don't expect gold to fall down to around $1,200 an ounce. In fact, we're bullish gold. We've got a price target of gold at around $2,500 by the end of this year. And yeah, we're expecting about a 4 times increase in the gold miners, in particular the juniors. But I don't trade ETFs. I buy individual stocks, individual explorers. That's what I do. That's what I love to do. And with that, I want to give a shout out to the Australian Gold Conference. So next week, I'll be at the Australian Gold Conference in Sydney. So if any of you guys watch this channel, that will be there. If you see me, hit me up. Love to meet you guys. Love to have a coffee and have a chin wag. I want to plug Kerry Stevenson and the Australian Gold Conference. They've got some wonderful miners presenting there, and they've got a lot of my stocks. So they've got De Grey Mining, Sunshine Gold, Kalamazoo, Mika Gold, Far East Gold, Zenith Minerals, Kingston Resources. Let's go on to Wednesday. Navarre, White Rock, Evolution. Evolution, or should I say it or not? Whatever. I've been selling naked puts on Evolution. Been selling strangles on Evolution as well. And so that's a miner. That's a producer. Investigator Resources. That's a very exciting silver explorer. Catalyst Metals, Pack Gold. Pack Gold I'm extremely bullish on. Alto Metals. So look, there's just so many wonderful speakers and wonderful presenters and opportunities at the Australian Gold Conference. So if you guys are in Australia, you're in Sydney, you're going to be attending there. If you spot me, hit me up. Love to meet you guys. Anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it, guys. Take care, and I'll see you all again on another episode of Finance Uncut.